Bloomberg oil markets reporter Mia Gindis joins us now for more. Mia, what has been the state of the flow getting out of the Strait of Hormuz, and how big of a difference will it now make with the foreign minister saying that, yes, for commercial vehicles, it's open?
So as of lately, the flow through the Strait of Hormuz has still been extremely minimal, right? So back in the day before the war, we used to see around 135 ships per day transiting through the Hormuz. Now the levels are usually less than 10. The truth of the matter is, even though this is a positive development toward a longer-term opening of the Hormuz, it's not going to mean much just yet, right? We're still having a lot of disagreements between ship owners and charters about who takes the risk as far as transiting the Hormuz. We don't know how safe the Hormuz actually is. There's some, feelings that perhaps Iran has placed mines there. We don't know the extent of what's true or what's not at this point. We need to see a confidence among insurance companies to actually be able to extend, insurances to ships that are transiting through. So in the short term, we probably won't see an immediate uptick in flows, but it's definitely a step in the right direction.
The market taking it as a big step in the right direction. WTI is now at $85. Brent is at $90. A lot, though, Mia, has been discussed that even if the Strait were to reopen, even if the conflict were to end, there are still scars to the energy infrastructure. With oil at $85 a barrel for WTI and $90 for Brent, is that being priced in?
So at this point, it is still being priced in, but there's definitely more of a feeling in the physical market rather than the paper market about the long-lasting scars that this war has caused, right? So we will probably still see a premium, like I said, via insurances flow down into the price that it takes to carry freight throughout the world. Likely, Asian buyers are not going to want to turn back to the Persian Gulf so quickly. They've seen what it means to rely on one source of energy, and at this point they'll probably want to diversify, and those longer hauls are going to also translate into higher prices for carrying that freight. It won't be as quick of a recovery, I think, as a lot of people, at least speculators in the paper market, are assuming.